It's fine and she lit. It's fine and she lit. Ah. Hey everyone. Happy Financially Lit Tuesday. Per usual, give me 1 second while I get this popping on the gram. Oh my gosh. Yeah, I'm not gonna believe this. So I am doing I'm taking a little break from social media and I removed the app. And now I don't have it on here, but that's okay. Um, what's going on? My phone's a little delayed. Give me 1 second, y'all. Give me y'all a second to hop on as well. Share, share, share. Hello. Oh, oops. Okay. So today I will be talking about budgeting. I'm not gonna hop. Give me one moment so I can go ahead and get the Instagram popping, and then we can get started. Mm, mm. I'm supposed to be doing I'm trying to do there we go. All right. Okay. There we go. Okay. My bad, y'all. My bad for the little delay, the little technical difficulties. Okay. All right. Cool. All right, so Instagram popping. All right back at it. So hello everyone, happy Financially Lit Tuesday. Today I'll be talking about budgeting. We're getting into that time of year where we're about to hop into the fourth quarter of the year. So we really kind of want to make sure that we're going to the fourth quarter with that right mindset. And throughout the year we got away from saving. We forgot about our savings goal. We came into the year saying, I'm going to have 10,000, 20,000, whatever the case may be in my savings account, 5,000 in my savings account. So just a reminder as to those promises you made yourself at the beginning of the year that, hey, the year is still going on and we're not going to forget about those financial goals. Right. So I'm going to be going over a few budgets. As you know, like we're at Grand Rev, we do personalized budgets because every budget is not for every person. Right. So you're not just going to see a budget and be like, oh, yeah, like that's the one for me. It just caters to my lifestyle so well. It doesn't always fit like that. So a lot of the times we have to make sure that we create a budget. Hey, thank you, little Wayne. 011. Thank you. Hello. Thank you for tuning in. Yeah, so we really do got to make sure that we're holding that on our mindset. So I just wanted to make sure that I go over budgeting again. It's been a while since I went over budgeting on the live. So I wanted to kind of get back to that so that we keep that in the back of our minds. We're making sure we're creating that monthly budget and we're tackling those financial goals. Hey Shirley, hello Blakes. And my piece on Facebook. Just say hey and what's up. Let me know you're here with me, tuned in. But yes, so I'm going to go over three budgets, different budgets today. I'll be going over a couple of ways on how to knock down your debt throughout the year. I know a few people you've accumulated debt or had to take out of your rainy day fund or whatever the case may be. So we're gonna go over some tips today. First things first, we know that we have to go into this with a clean and fresh and just abundant filled mindset, right? So we have to make sure that we have the right mindset when we're going into this, because if we go into it and we're like, yeah, I think I'm gonna save that money. I think I may be able to do this or that or the third, then um, chances are you're not gonna do it, right? So we need to make sure that that we are accountable and we know that we create our life, right? We create the exact amount of our financial success. Our money works hard for us and makes us more and more money. So making sure we're repeating that to ourselves, we're living in it, we believe it, even if like we're having a challenging time, we're actually like living out that affirmation, making sure we're continuously repeating it to ourselves so that it becomes we're speaking life into the way that we want to live, right? Um, I'm, what about you? I'm trying to Facebook be doing too much, in my opinion. Okay, I got it. All right, cool. Okay, cool. Um, First things first is the the budget, the income versus expense budget, which is really pretty simple. It says, hey, what's my income, what are my major expenses? So usually your major expenses is your three: your needs, your wants, and your savings. So it's really a 50-30-20 budget. You put, what a blessing you are. Oh, thank you. um, So you put 50% in your needs, 30% in your wants, 20% in your budget. I mean, in your savings. So that's a quick budget. And then you have the reverse budget. Your reverse budget is really making sure that you pay yourself first. Y'all, it is so important that you're paying yourself first. It doesn't even make sense because a lot of the times, like, we get our money. Yeah, I got my tea with me. A lot of the times we get our hey Matthew, we get our paycheck or we get paid and we're like, okay, I got this, that, and the third bills, right? I have to knock down these bills, get them paid. And we forget to save for retirement, save for a future investment. We forget to pay ourselves, right? So the reverse budget says we are going to pay ourselves off the bat. Like before, like basically as that money is hitting our account, money is leaving to another savings that we don't even see on a day-to-day basis, but we know we got money saved up somewhere, right? So that's what that money is. And so with that we go, hey, we have a couple of we know that we're saving for retirement, right? So the reverse budget, we're paying ourselves first. We're setting aside a specific amount of savings to put towards our goal every time we receive a paycheck, whatever the case may be. We can even set it on automatic withdrawal. I really recommend that. I even put my savings on automatic withdrawals, all of them. Like every week, they automatically take money out, and then it goes into the savings accounts. So like I'm not even guessing. I'm not even saying like, oh shoot, like I forgot. There's no doubt about it that that money is going into that those savings accounts because I've already set up those automatic withdrawals. So make sure y'all are doing that. Like it is so easy to get to $0 and forget to save. But if you make it a habit or you don't even have to make it a habit, just automatically set that automatic withdrawal. Hey, just go ahead and do that thing. So the other is the wealth up budget. Y'all know Grand Rev had to come out with their own budget, right? Of course. So the wealth up budget is, like it says, it is going to get you the wealth up. Of course, Grand Rev, like I said, we have a personalized budgets, which are the real wealth up budgets, right? So those personalized budgets cater to the individual's lifestyle, your goals that you want to accomplish. But for this particular wealth up budget I'm about to go over, it helps, making sure that you're saving on both ends and knocking down your needs instead of being so stuck on the wants. So with the wealth up budget, we're going to calculate our income after taxes. So, we don't want to be stuck on that number before taxes because that money, the money that that's going to go to tax is not money that we're going to really have to spend. So just go ahead and get your money, calculate the money that you're going to have after taxes because that's what you're going to have to actually move money around and pay bills, whatever the case may be. Right? So what's your net income? After that, you're gonna pay yourself. So be intentional about paying yourself. Like, hey, if you want to have $10,000 by the end of next year because you want to buy um, a new home, or you want to buy, or you want to open a new business, or whatever the case may be intentional about it. If you want to make sure that, hey, I am retired by 55 years old, 65 years old, be intentional about it. And you need, say, $5 million, $2 million to retire, break that out and be intentional about how much you're saving, putting to the side, and set it on automatic withdrawal. So with the remaining amount, you're going, so after you pay yourself, that intentional pay yourself towards that future investment, you, with the remaining amount, you're going to tackle your needs, wants, and savings, because we know that we're paying ourselves first off the top, right? With our budgeting, then we're going to get our needs out the way. So our needs, that's going to be the majority of what's left, right? For the most part, a lot of times it is. So we're going to get our needs out the way, our rent or mortgage, our car note. Hopefully you don't have a car note, but if you do, getting that out the way, whatever bills you may have. And then your wants. So say you want to make sure that you're putting some money away for vacation, or you want to go out to the movies or go to a bar with your friends, or say you go out every week and you spend $50 a week. So for the entire month, you put aside $200 for just leisure, having fun, enjoying your life. That's okay, but you have to make sure that you're budgeting for those things and it makes sense. If you don't have $50 to your name after your savings and everything like that, you want to still go out and spend $200 a month on living your best life. Like, no, make your budget make sense, right? And then we're going to do our savings, our rainy day savings. So the rainy day savings is usually linked to like your immediate checking account. You don't want your pay yourself, your intentional savings to be linked to your checking account, because when that happens, usually a lot of times, if something little happens, we go and dig into that fund. And then we wound up saying like, oh my gosh, like what happened to all my savings? So you have your intentional savings and then you have your rainy day savings, two different saving buckets, right? So that you make sure that you're still putting that $1,000, $2,000 to the side in case of incidentals. And then you have that, hey, future investment, retirement savings. And then you have your wants, your vacation, your eating out, whatever you want to do, live your life. You make sure that you're putting some wiggle room in your budget to enjoy your life. And I sit down with my clients all the time and we go over their budgets, because we want to make sure that they don't feel like bottlenecked with their budget. They don't feel like restricted, that they can't live, right? So you do want to, because if you do, you're not going to stick with it. You're going to end up doing it for a month and you're going to be like, oh my gosh, that budget sucks. Versus, oh, I know I have $50 for the week. And then you wind up saying, oh, shoot, I only used $20 this week on going out. I have an extra $30. I can put that $30 somewhere else. Or maybe whatever the case may be, or towards another want or an extra savings. Yeah. So those are those three budgets. I'm going to take a little sip, y'all. Yeah, I know I'll be thirsty. Uh, of course, a couple of weeks ago, I did go over the wealth hierarchy, which was based off of the Maslow hierarchy of needs. If you didn't see that live, it's on the Sipping Wealth YouTube page, but I really went over it. It's really going to go break down and go over like the different steps as far as building your financial house, right? So what's your foundation look like? Because a lot of times we jump and we're like, oh, I'm starting to make some money now. I'm ready to invest. Like, that's probably one of the biggest mistakes we make, because we jump to investing too early. And then we wind up clearing out our investment too early, too soon, and it doesn't allow it time to accumulate or grow. So we have to make sure that when we're ready to invest, we're ready to invest. Like, that money is not going to be touched for years. It's going to allow it time to grow, that interest rate to really work, and that money to work in your favor. So a lot of times we're like, oh yeah, I'm making a little bit of money now. I'm ready to invest. Ooh, turn up. But um, your tire pop and you just put your last dime in your investment account. Like that's not how you invest. So really making sure that you have like really honestly like throwaway money, disposable income in a sense, so that you can invest with. So you really want to make sure you have that your health and you're protecting your assets with life insurance, health insurance, all that good stuff, and working your way up the hierarchy. Um, any questions? I know I've been going on. Let me make sure I am not skipping over by anybody on oops on Facebook because I know I'm kind of gone. Okay, so I believe we're okay. What I'm looking for now is one of my notes I forgot to take out. Okay. Um. Okay. We're good. We're good. All right. So another thing I wanted to go over is making sure. Also, before I move off of budgeting, you also want to make sure that your budget is coming out to zero. You really want a zero-based budget because if you do have any extra money at the end of your budget, it winds up going to the wayside, and then you really don't know what your money is doing because you're not accounting for that extra money. And you just kind of like, oh, okay, it's there. Oh, shoot, what did I spend that money on? It was just sitting in my account, and then I don't really know. So, yeah. Hey, Mark. So, I am going to go over a little bit about paying off the debt, like I said. So, two like really good methods of paying off your debt, which is the snowball method and the avalanche method, right? So, they're cute, they're cool. What should you do if you have a little extra money at the end of the pay period? Just go ahead and throw it in the savings. So say you went and did your budget, and you're like, hey, I paid all my bills. I even had an extra like $30 to play around with, and I put away for my retirement and savings plan. And you still had some extra money. Go ahead and build another savings plan, or maybe figure out something that maybe you don't have already established in your financial house. Like, do you have the adequate life insurance? Do you have any life insurance at all? Do you have anything that's growing that's in a savings plan that's going to grow at a better interest rate? So putting money into those vehicles. Do you have any debt? So if you have any debt, you want to really tackle those down. So if you have extra money, put more towards the debt that you already have that's existing, so you can pay that debt off faster. Um, okay. So for the snowball method, I'm going to go over first, is really starting with the smallest debt and then going with the bigger debt. So say, and when you're doing this method, it really helps get you like those small wins to build momentum. So usually when we're like tackling so many debts at once, it feels like we're not doing much. It feels like, oh my gosh, I've been paying off this debt forever. Like, when is it gonna end, right? But when you do the snowball method, say you have a credit card debt for $200, and then you have another one for $1,500, another for 3,000. You will tackle the one. You'll put all your money into the one that's $200, pay that off completely, and then go to the other one that's $1,500, then the one that's $3,000. Yes, there's a minimum payment that you have to make every month. Don't just not pay your bill and then make it delinquent. Pay the minimum, but put bulk of the money into that small debt first to go ahead and pay that off first. So you're working your debts from smallest to largest. And then you roll the money that you would have used to pay that smaller debt, and then you roll that into the next debt plus the money that you would use to pay that next debt as well. And you kind of just flow like that, like a nice snowball. Um, so you can also, there's a lot of different debt calculators online that you can use to really figure out like how much savings or how you can pay your debt off faster, or better ways, better methods of using to do that as well. So a debt calculator is really awesome. If you have a mortgage, really figuring out what you can pay on your mortgage to get that so that you're not paying so much in interest over the years, because that really can equate to a lot of money over the years, right? The other method is, oh shoot, you can't see me. The other, oh, Facebook, my bad. So the other method is the avalanche method, and really that's tackling the biggest debt first and then working your way down. So really it's like, hey, like I just want to get this like huge debt out of the way because it's like really boggling me down, right? And then going to the smaller debts. It takes longer because you're tackling that bigger debt, but I can't believe this thing. I put the paper in front of the camera. Um, it takes longer because you're tackling that huge debt first, but you're saving generally the most amount of money because you're tackling the one that's accumulating higher interest rate at a higher interest rate. I mean, that's you're paying more interest for. Um, yeah, so and it goes for like, say, if you have $100,000 loan or $50,000 loan versus a loan for $10,000. Generally, that $50,000 loan is going to cost you more because of that interest you're paying to the bank or the lender. My student loans are my biggest debt, but it isn't as much as most. How much did you pay on your loans when you first graduated? Uh, um, That's a great question. So I just graduated, well, my graduate school not too long ago. And that's a good question. I just kind of like put whatever I want towards it because it's zero interest right now. So I just kind of like, if I do 200 or 3 or 100, I just kind of send it off because it's at a zero interest rate. And, and I'm not really too stressed about my student loans as much as I should be, versus my other debt. So like my mortgage, I rather put more money towards my mortgage than my student loan debt. But if you have extra money, I would definitely recommend, yeah, just throwing it towards the student loan debt because it's not something that hopefully they make it go away, right? They say, hey, student loan debt has been excused. I'm waiting on them to pass that legislation. The day they pass that legislation, whoo, amen, hallelujah. But until then, um, yeah, they're gonna get whatever at this point. I have hopes, like somewhere in my heart, I'm still hoping that they're gonna excuse all student loan debt, like just wipe it all away. Somebody help! Just hack into the thingy and just delete all student loan debt. But yeah, you should be fine, Matthew. Uh, but any money that you're paying in your student loans right now is going directly to the principal balance. So it is a good time to pay down that balance, that student loan balance, because you're not paying on interest. You're just paying to the principal. Uh, so debt consolidation. I want to go over debt consolidation because a lot of people get like debt consolidation loans, and it's really like probably one of the biggest mistakes, like financially, that you can make, because what it does is, one, the debt consolidation loan usually is at a high interest rate. even if it's at a lower interest rate than one of your credit cards or whatever, or a couple of your credit cards, but it's for a bigger amount of money. So if it's for a bigger amount of money at a slightly lower interest rate, you're still paying so much in interest because of that principal balance or that principal amount, right? So what happens is they say, hey, you know what? You have all this debt scattered across 5 credit cards. I will give you $50,000 at a 10% interest rate, right? It's never really that clean, but I'm using 10%, you know, at a 10% interest rate. And then you're like, okay, cool. I'm just going to put all my debt on one place. But when you do that, you're paying $50,000 times 10% interest to the lender, right? Versus you paying that $100, $1,000 on the credit card at that 11%, 12%, right? Another thing that happens is the habit that got you into that predicament in the first place still exists. So what happens is the person ends up getting a debt consolidation loan, and they end up repeating the same thing that got them into all those debts in the first place. Because you never took the opportunity to look at the habit what caused you to get into that financial predicament in the first place. So what you really should be doing instead of looking for debt consolidations loans is really figuring out, okay, how do I get myself out of this rut without repeating the cycle of having to utilize all these debts or credit cards or things like that. Versus saying, hey, let me stop using credit cards. Let me leave my credit card at home and stop swiping every time I feel like it's an emergency. Because most of it is not. So leaving your credit card at home, figuring out, okay, let me stop using other people's money for a while and like get my stuff together. I know I wanted to say the other word, but we're gonna be good. We lie. I'm gonna get my stuff together because I need to make sure that I'm not in a predicament where I have $50,000 in debt scattered across 10 different credit cards or whatever the case may be, right? So let me stop using the cards and start paying them off. Now, when they're all paid off, I can go, okay, what, like, am I okay to start using one card? Maybe but you really don't need to. Generally, you can still build your credit without having to swipe every 10 seconds, right? So making sure that you're not getting into that habit of continuously swiping or using your credit card because it's such an emergency. Because 9.5 out of 10, it's not. We be playing. So stay away from debt consolidation loans. Stay away from them. Stay away from them. They're not a good idea in any regard. You have to tackle the habit that got you there in the first place. If you don't, you're going to repeat the cycle. You're constantly going to be fighting debt. So let's, get this debt-free life together. Get a budget because you cannot wealth up without a budget. If you don't have a budget, then you don't know what your money is doing. And if you don't know what your money is doing, you're losing money. Your money's running wild in this life by itself. Should I pay on my credit card and just the minimum on the student loan? It's really up to you. So, like, I went over those two methods, the snowball effect or the avalanche. So if the credit card debt, usually your credit card debt is probably well, I'm sure your credit card debt is smaller than your student loan, hopefully, but usually you can go ahead and tackle your credit card debt. So say you had $2,000 in credit card debt. That extra money that you said you had after the pay period, go ahead and put all that towards that credit card debt. Just put it all on there. Just get rid of it, and then stop using your credit card for a while. Be debt free for a while, and without having to constantly be in a position where you have debt sitting on your card because you're just paying the institution a bunch of money just to use their line of credit, their money for a line of credit. So just go and and your money's not even growing at that same interest rate or more. So getting to a predicament where your your money is growing faster than you're paying out in interest to these institutions. So go ahead and stop using your credit cards, and yeah, go ahead and knock it out. And your student loan, like I said, it's really up to you which one you want to do first. Usually you want to do like the smaller one to get those small wins under your belt so you can feel good and keep that momentum going. And then, but if you say, hey, I want to tackle that student loan debt and just like get it out the way, then you can do that as well. It's the avalanche method. And I'm sure the government will be really happy. Or not government, private sector people. Um, but yes, Matthew. Let me make sure I'm not skipping anybody. Any questions? Let me know if you have any questions for my Facebook peeps. Thank you for joining in, Valius and Corel and all these other lovely people. Thank you for joining on. And I'm just gonna go over one more thing, and then that's it for tonight. And then we're back next Tuesday for Financially Lit. And then I'll go over a few announcements for Grand Rev at the end of the live, right? Because Grand Rev is always doing stuff, and I'm super excited. Back on debt. Outside of the 3 budget methods that I went over, if you do need a specialized budget for you, go ahead and reach out to Grand Rev Financial, and then we can go ahead and book a session to go ahead and create a budget for you so that you can get to your wealthy goals. And so some tips on how to get out of debt faster is pay more than the minimum payment. You don't want to just pay the minimum payment because, of course, they want you to stay in debt longer. They want you to pay them in interest. So pay more than just the minimum balance or payment amount. And try the snowball method. The snowball method does get you that momentum. It gets you moving a little bit faster because you're putting all your money towards one small debt, and then you just roll it into the next debt and you just keep it going. The avalanche is a different method. Some people use it, but that snowball, just pop, pop, get that in. And pick up a side hustle. It could be as small as Ubering, whatever the case may be. You can do Uber, you can sell rocks, you can sell Kool-Aid, whatever it is. Pick up a side hustle so you can get some extra money and put it towards your debt. Just pick up a whole up. Look, all the money that you do in Uber, I'm using Uber as an example, but all the money you get in Uber, just go ahead and put all that money towards debt. Imagine how quick you get that debt tackled, right? So pick up that side hustle. And then create a budget. Create that. Yeah. I get on the live and talk about budget all the time. Probably every single live because it is so important. Beyond important. Like, I can't even stress how important a budget is. Okay. And then sell everything you don't need. Look, we be sitting on stuff we don't need. Like our closets filled with clothes we don't wear. Um, yeah, just sell it. Get it out. Get it out of the way. Have a garage sale, something. Drop it off at um those little stores that buy what your hand-me-downs and stuff. Or offer up or Craigslist, something. Get it out. So yeah, get a seasonal or part-time jobs. We are about to get into the 4th quarter. Right now, in fact, Grand Rev is even hiring, right? My company is hiring. We're about to get into tax season. We're hiring tax professionals as well. Um, doing interviews right now for my new assistant. Like, get you a part-time or seasonal job. Do the thing. And then ask your credit cards for lower interest rates. Negotiate. I negotiated all my interest rates down. I was like, y'all playing. So negotiate your interest rates. Also consider balance transfers. So balance transfers can be good. So balance transfers can, like, they have promotional periods. Well, they do where they do 12 months zero interest, and then you can like put your transfer your debt onto that credit card, pay it off like really quick in those 12 months, bop, bop, and then you lit, right? And then use found money to pay off your balances. Any extra money, just go ahead and put it towards the debt. Drop your expensive habits. Look, shiny and gold is pretty, but look, you just hold on. We're gonna get there. We're gonna wealth up for real, and then you can splurge. All right. And yeah, step away. Just really like put your credit cards away. Stop using them for a while. I even had to be like, look, I'm gonna just leave these babies home because sometimes I get away with myself. I'm like, ooh, let me do a swipe, and then I'm like, hold up. I look at my budget and I'm like, ooh, I really wasn't consulting my budget this month because it'd be crazy. So really make sure that you just leave the cards at home. So you said, what do you need for Grand Rev? Oh, Grand Rev, we are hiring a virtual assistant and then tax agents. So for Fort Lauderdale, Jacksonville, and South Carolina for the new tax season. So yes, and that's it for tonight. Let me know if y'all have any questions. I'm just be on one more minute. Make sure I check it out. Of course, the recording of this live will be on Sipping Wealth YouTube channel. If you haven't subscribed already, subscribe to Sipping Wealth. You know, you gotta seal the wealth, yeah. Sipping Wealth YouTube channel. Subscribe. Yes, and let's wealth up. It's it. Any other questions? And make sure before I press the end button. Okay, think I'm good on Facebook. Good night, y'all. Good night, good night, good night.